Baby, 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 baby! Yes, yo, we're back, my friend.
We're
back. Guys, these weeks are flying by. I just said it on my Instagram video this morning. How, Joel? How?
I don't know.
We're having too much fun. We're literally having a lot of fun.
It must be. The markets are just like, they're so good. They are so good.
The thing is, bear in mind, obviously, look, let's just jump straight into this one. This week, we were saying, there hasn't been anything really particularly sexy as such on the calendar. But we've had plenty to talk about. And you called this last week. You said, obviously, the calendar's light, but I'm sure we're going to see a continuation of the moves from the other week. Yeah. So, where do we start?
Oh, my God. I think you got to start with stocks. I know we usually focus on FX, but stocks, man, like US indices in particular, Dow, S&P 500, NASDAQ, they're getting smacked as we speak. They're about 15% lower on the week.
I know, dude.
It's crazy.
They've been dropping a minimum between sort of 500-600 points per day, right?
For
Maybe
the Dow,
more?
yeah.
Yeah, for the Dow.
Exactly.
Those are big moves.
Massive.
Everyone's panicking. It's panic selling, right?
Yeah.
At the end of the day, the market's built up by sheep. I say it all the time. The market's built up by sheep. Everyone's just offloading big outflows of US stocks. And I mean, right now, this is something I did a post on yesterday. What's happening in the bond market, we're seeing a huge amount of demand there.
Exactly. That's where it's going.
Exactly. People need safety right now. They're panicking. So, we're seeing yields on those bonds come down to record lows because there's a lot of demand. What else?
Exactly.
What else?
Exactly.
Yen, big correction. After obviously being slammed the other week. Was it last week? Yeah.
Yeah, it was last week.
Last week. Yeah, yen was slammed because of obviously a bit of a late reaction to the contraction GDP, and now people correcting and going back. JPY is being
it looks like it's a safe haven again. I think it kind of helps the fact that we've seen dollar come off quite a lot as well. Because remember, we were always talking about dollar as a safe haven. No one's talking about that anymore. It's like yen again. People even talking about euro a little bit as more of a safe haven, because basically the Fed pricing has just gone crazy for Fed cuts this year, in line with stocks coming down. Whereas the ECB and the BOJ, they can't really do that much because they've already got rates really low.
These two, obviously the latter, the the ECB and the Bank of Japan, obviously just to bring it in perspective for you, as Joel said, they can't do anything. He's right. They have literally kitchen sinked it all. They have thrown everything that they possibly can to try and sort out, obviously, low inflation. What other issues? Low inflation,
sluggish growth, general just sluggish economies.
So obviously they don't have any room to do anything. All they can do now is just sit and hope for the best.
Exactly,
much, right?
Exactly. Yeah.
Obviously you can go deeper in negative interest rates, but it just could potentially cause more damage than good.
Exactly.
Maybe because rates at the moment in the US are at one range of 1.5 to 1.75%, right?
Yeah.
So, mate, there's plenty of room to go down.
Exactly, and they don't even do QE.
No,
not officially anyway.
Exactly. So I think obviously that's why the dollar's been hammered. At the end of the day, it's not even just one bit of action potentially from the Fed. It could be more than one.
It's a cycle of easing.
Indeed.
People are expecting a full cycle of Fed easing now, as opposed to pretty much nothing from the ECB and the BOJ.
Exactly. And it's funny because you got to bear in mind, just in 2018, we were in a rate hiking cycle for the Fed.
Yeah.
You know?
Yeah.
It's funny just how it changes like that.
Yeah, it's mad.
One thing to note, as I pointed out to you, okay, now, guys, obviously this is Sunday that you're watching this, but I'm keeping an eye on the Dixie right now, and it is shaping up potentially for a bit of a pullback, Joel. Maybe at least if you look at the Dixie into 99.00, because I think euro dollar, that daily candlestick looks subject to a bit of a pullback. Back to that, remember that trend line we were looking at?
Yeah.
Which I guess is hovering around a psychological 109 area, which would make sense. I mean, that move this week's been incredible. We called it.
Yeah.
Check the podcast, or was it the podcast?
No, it was last week's podcast.
Yeah, but anyway, we were looking for that pullback, so it was seen.
Yeah.
What else? Cracking on.
Gold! Yeah, that's what I was going to say. Gold!
Maybe we're freaking out about this. It's just dropped today. 1570.
Yeah.
1570. Now, actually, we have to cover this, okay? We have to cover this. Because I had quite a lot of Instagram messages about this. Ken, why is gold getting slammed? Now, here's my take on it. Obviously, I told you, didn't I, Joel? Didn't I call the shorts? Didn't I?
You did. He did.
I called him.
He did.
I called him 1650. Now, I didn't put my money where my mouth is, unfortunately, there. So I'll hold my hands up. I didn't, actually, because I was already done for the week. But look, one thing, my take on this, and then you give me your take, okay? You give me your take. My take on this is, at the end of the day, Gold was pumping already, right? We were pumping out of the, the frantic panic of coronavirus. Whereas at the time when gold was really, really pumping, I'm just checking the calendar here now. It's earlier in Feb. It's earlier in Feb before stocks started selling off. So this is almost like this was the gold's move. This was gold getting ahead, a steam ahead. And now obviously we're having this huge unwinding, this huge correction. So gold had already had its move.
Yeah, right? I completely agree, to be honest, because fundamentally speaking, things appear to have got worse this week than they were last week. So it's not backed up by the fundamentals. But yeah, I mean, I think you probably agree. Like long term, I'm still bullish gold. It's just
agreed.
Yeah,
agreed.
Just waiting for it to come back to some levels where it can set and then get ready to go on again.
Yeah, because, I mean, I was looking at 16.11 as we were just pointing out, and then I said, Joe, I said, obviously, I'm not going to put an order in there because I know I'll just end up potentially getting smashed, potentially stock stringing to the downside.
You would have done, yeah.
I know, I would have got raped.
Oh, my God.
I would have got raped, and that's the thing. When times like this, the broker, even if your stop's just below, your broker's not filling you.
Yeah.
The broker might have filled me down at 15.80. So anyway, I don't know. We'll have to see. I think, guys, if you're wanting to get in on gold, I'll just wait for the market to stabilize right now.
Yeah.
Just stabilize, consolidate a bit, and then we'll just take it from there. See where we go. But I am long term bullish.
Yeah.
Still looking at 17, 1800, and even 2K can be done. Especially if coronavirus gets worse, dude. You got to put your money in gold.
Agreed.
Safe haven, baby. What else? What else has been highlights this week?
What else is there to talk about? I mean, just massive sell-off, flight into havens, dollar weakness. I think we've pretty much covered
that's
all the major things.
That's the major stuff.
I mean, UK-EU negotiations.
Yes, let's talk about that quickly. Let's talk about it because, mate, the pound did lose some ground.
It did, yeah.
It lost a decent amount of ground.
Yeah.
At the end of the day, markets are nervous now.
Yeah.
They're nervous. Why?
Yeah. Well, on Monday, the first round of negotiations between the EU and the UK commences, and then it goes on until Thursday.
Yes.
And we had the two sides releasing their official negotiating positions this week. I mean, it was what we expected. We knew that they were going to, the EU was going to want to tie the UK to their rules, and the UK wasn't going to want that. The EU was going to want the UK fish, and the UK was going to say, no, you can't have our fish. It wasn't surprising, but markets still kind of slipped on it, though. It was interesting.
I know. I think at the end of the day, look, Boris Johnson's made it clear before, and he's set that risk and doubt in that worry in people's minds that Britain is prepared to walk away from this talks. That's the danger.
Yeah.
That is a serious danger. The markets will not have priced that in.
Yeah.
If that happens,
the closer we get to it, they're going to have to price it in more and more.
Yeah, but mate, the pound will sink under 120 again. Back to remember Brexit after that happened.
Yeah.
Back to those sort of levels. 118, I think we touched the low in GU. Could happen.
Could happen.
Definitely. There was something else that I just wanted to quickly mention. No, let's move on. Next week, talk to me.
Next week, there's quite a lot. So, okay, let's start off with US data. Obviously, we've seen all this massive increase in the pricing for Fed easing. Is February data going to be that bad? We get ISM manufacturing and non-manufacturing. We get NFP as well. So that's probably the biggest thing in the market next week. How did the US economy do in February, the first month where people started really, really, really worrying about coronavirus?
True.
So we'll get to see that, and if it's worse than expected, then it's going to be further downside for USD.
And while on topic quickly of US data, we've had a couple of bad points this week. We had poor. What was it?
We had bad PMIs last Friday.
Richmond Fed.
Yeah, a couple of the
Fed
manufacturing surveys were bad.
Regional surveys were not great. What did you say? Bad what?
PMIs last Friday.
Yeah, bad PMIs last Friday. So, it could go either way. I mean, I'm leaning more to some downside, in terms of data points.
Yeah. No, same.
What else? RBA. Talk to me.
Yeah, RBA. Well,
talk to me.
I mean, this is the case because we've got BOC next week as well.
Yep,
basically, all of these central banks, the RBA, they were cautiously optimistic last month, but that was before coronavirus went crazy, right? So they're going to have to shift their position. They're going to have to. So the thinking, I think, is RBA going to go dovish but not cut. BOC might just cut straight off the bat because the BOC were already a little bit more dovish than the RBA. They had already said.
They could surprise. The market's expecting a rate cut.
We haven't actually got expectations for this just yet, but yeah, I think it's going to be pretty close.
Yeah, I mean, given that language last time, we're expecting it, I guess.
Yeah.
So there could be some nice further weakness there. CAD's already been getting smashed, beaten. because of obviously the oil markets being battered, right? Smashed that psychological $50 mark. We're at $45. And there's something else that I just wanted to observe. Oh yeah, Aussie dollar. There's still some room for some downside. I'm looking the next zone around 63.00, so still a good 150 pips or so there. Okay, so I mean, Joel, that's been it, really, pretty much. It's a pleasure.
Yeah.
I don't know what we're going to do about next week because I'm in Bali. So
FaceTime.
Yeah, maybe we'll jump on FaceTime.
We could do. That would be
Skype
cool.
or something. Yeah, we'll figure it out. But baby, I hope you enjoyed. We hope you enjoyed another round of the podcast. Have a smashing trading week, baby. Let's get it.